Okay, so what is going on, guys? Today we are going to do the second episode in this mentorship. But before we do that, make sure to leave a like and subscribe so you can see more of these videos. So, as you can see here, we have a lot of topics to talk about today. We will talk about time and price, the most important things in trading. Let's get to it. So, the first thing that I want you to understand is that we will not trade for the entire day because the market moves, as you can see, are only happening during a specific time of day. Why? I'm gonna tell you after because you have to understand this. But if you saw more trading videos before this one, your brain might have been poisoned with bad information. Okay, so the majority of people are trading with retail techniques, and retail techniques are basically the opposite of what we are doing here, because and this is the thing that no one believes when they come from retail trading. The markets are driven by algorithms. There is no buying pressure and there is no selling pressure. The same things happen every single day, like similar. That can be true if people are pushing the price. But imagine this. You were the man that had the power to control the markets and you wouldn't do it. You would give it to the other people to control the markets. Fuck no. So, this movement right here is not created by multiple people that buy in the same time. No. These markets are driven by algorithms which are, and this is where I wanted to come, which are driven to take your stop loss, to take your retail stop loss. Because imagine this, if 99% of people are doing the same thing, they can basically target those people. So let's say, what do I mean by this? This right here would have been a good level for retail traders to sell. After seeing this too, they would have been convinced, right? Look at this. They place an order right here with their stop loss. I don't even know. In the last, I don't even know where they place the stop loss. Anyway, look at what happens. It takes the stop first and then it rallies. Okay? These markets are moved by an algorithm. So by knowing that, we are going to understand the two premises that we need in our heads before we are even trading. These markets are driven by time of day and price. Time and price. There is no indicator. If somebody is trying to sell you the best indicator, I 100% know that they're not making money in the market or they're not consistent with it. The first period I'm going to want you to trade in, which I'm going to explain to you why, is the London kill zone. And before we get into it, I know most of you guys are not from America that are watching this video, are not from the USA, so I know this is bad. I know you wouldn't like it, but the first thing you have to do when you open your charts is set your time zone to the New York, okay? Because this time zone is what the algorithm sees. Because you will see in the next videos why you need this time zone. Because at New York Midnight Open, something happens. I cannot explain to you, but something happens right here. And yeah, so the London kill zone is from 2 a.m. New York time to 5 a.m. New York time. And by the way, I'm giving you Forex. I do not check Forex at the moment, but I'm giving you Forex right now. So you will look to find the setup in this time zone. And I know if you're just beginning, you do not understand why, you do not understand what you need to do. But here's the thing. The algorithm starts to seek the stop loss of retail traders in this time periods. So as you can see right here, retail would have seen this level as a support level, which it means that it needed to go higher from these levels. All right, so they would buy. I don't know why my stop loss does this. They would buy right here, And look what happens. In this time zone, it comes in, takes the stop loss, and it goes in that direction. And not only they took these guys' stop losses, they took these guys' stop losses. Okay, so you see, when this time comes, the stop losses of retail people are hunted. And welcome to your first concept, the liquidity. Yeah, this is the first concept you're gonna learn with time because they're relevant together. They are irrelevant when they're not together, right? So in this time zone from 2 to 5 New York time AM, you will find to do this, to seek the opponent's liquidity. You're gonna find the opponent's liquidity, see a drop under it or over it, like here, and then you'll find a setup in the opposite direction. And how do you find this liquidity? First of all, when people from retail trading see this clean, do you see how clean these lows are? One, two, three, four. They're basically at the same level, right? When retail people see these things, they expect the price to come back into this area once again. This is flawed. And then go up. All right? So they see this as a level of support. It supports their price, supposedly, but it doesn't. So when you see these clean lows, right? Look at these lows. They're clean. They're in the same level. One, two, three, four. When you see these clean lows, as you can see, it happened right here. You expect the price to take it. And when you see clean highs, like it happened right here, when you see these clean highs, look what's happening. All right. So first of all, you have to understand though that there is liquidity above every high and below every low. But the first thing you have to do after you watch this video, you find these levels in this time zone. I'm gonna give you, and there's more. But wait. Okay. So you find clean lows like these ones, one, two, three, four, and clean highs like first of all these ones. Oh, sorry, what did I do? Like these ones, and like these ones, and like these ones. But why they didn't take this? We're gonna get into that. Okay. So the time zone, the first time zone for Forex is 2 a.m. to 5 a.m. New York time. The next time zone for Forex is 7 a.m. New York time to 9 a.m. You're gonna look for a setup in this time zone. As you can see, we do not have clear highs right here. Okay, so this is still liquidity. What you see right here, this is retail stop losses. All right, this is liquidity. We take this high, then create something, whatever. Don't even bother. You can see how they take this stop losses from the retail traders and they go in the opposite direction like I told you in this key time. So we have this range which goes from 7 a.m. to 9 a.m. New York time, and the last time zone, which is basically for your targets, because the market reverses here, as you can see right here. It is between 10 a.m. New York time and 12. This is where the high or low of the day forms. So basically, the high of the day, if the day was bearish, the high of the day would form in the London kill zone, all right, which it did. So this is why it didn't take this liquidity, because in London, if we are bullish, there's going to be a low of the day. If we are bearish, it's going to be the high of the day. And the low of the day in a bearish situation is going to be in the London close, which is from 10 to 12 New York time. All right. So today you understood what liquidity is and how liquidity can be used in certain time zones. You do not try to find setups like this outside of these time periods that I gave you, because you're just gonna fail. So what you are going to do right now after you watch this video You go to your charts, your dollar, whatever. You put your charts to New York, and then you put your kill zones, your time periods. So from 2 to 5, from 7 to 9, and then from 10 to 12. And after that, you search for clean highs and lows and see what happened to them. I do not expect you to believe me when I tell you these things. So you're gonna search for these things, and then we'll move on. Thank you guys for watching. Make sure you subscribe to the channel so you see more of these videos, and I'll see you in the next ones.